Here's how to double your profit in 6 months. And if you're an accountant, here's how you can do this for your clients. You need to understand some key numbers. The first one is gross margin, which is the difference between your price and the cost of goods sold, the direct cost of whatever it is you're selling or providing. And if you divide that by the sales amount, you get what's called the gross margin, times 100 gross margin. So if you're making £40 profit on £100 that you sell, that's a gross margin of 40%. The next one is your sales, and sales is made up of the frequency with which your customers buy times the number of customers times the price they pay each time. That gives you your sales. And if you multiply the gross margin by sales, that gives you your gross profit. Then if you take off the overheads, you end up with your net bottom line profit. Now, I'm not even going to look at costs, either direct costs or overheads, because they're less easy to alter and improve, particularly in the current climate. But I am going to look at things you can alter: your average price, the number of customers you've got, and the frequency they buy. Now, your average price, you can put your prices up, or you could do things like have different offerings for different segments of your customers or clients, different value propositions. So some of them pay you more than the standard price, and you'll find that a fair proportion would do that. The number of customers, if you nurture all the prospects for your product or service along what's called the buyer's journey, you'll end up with a lot more of them coming to you than if you don't nurture them. So you need a proper system in place to identify them when they first show interest, and then to provide information along the buyer's journey to nurture them so that when they do come to buy, they buy from you. Typically at any given time, 1 to 3% are now buyers. The rest need to be nurtured along the buyer's journey. And the frequency, you can improve that by having regular communications, regular offers, but also by having what's called a cross-sell, which is but when they buy from you for one thing, they buy another thing as well. So if you're a professional service like an accountant, when they're doing their accounts and their tax, you could also be offering them business growth advice so that they subscribe and buy that from you as well. Now, those three things that I've asterisked there. One other thing with customers, by the way, is you can improve the number of customers year on year by reducing the number that leave. And you can reduce the number that leave by having regular communication with them, regular offers. And you can actually attract back to previous customers by what's called a customer reactivation offer, or a client reactivation offer. That works really well. I'll explain that on another day. What I've done here is I've asterisked the three key numbers, and what we're going to do is look at the effect of just making a small 10% improvement in each. So our starting price is 100. We've got 500 customers or clients who buy twice a year on average from us. That means our revenue is 100,000. Our gross margin to start with is 40%. That means the direct cost of producing 100 quid's worth of goods or service is 60 or dollars. And gross margin 40. Overheads 20, and if you work the numbers out, you'd have a gross profit of 40,000, 40% of 100,000, and a net profit of 20,000. Now, if we increased our price by 10% on average to 110, and we increased our number of customers by nurturing them better and by reducing the attrition rate, and we get that up to 550, a 10% improvement, and we get them to buy 10% more frequently by having regular communications and offers, twice a year becomes 2.2 a year. Revenue goes up from 100 to 133,000. Our gross margin automatically also goes up because we're charging a higher average price, but our costs haven't changed. So our gross margin would actually go up to 45% here. Our overheads haven't changed, so I've left that the same. But the net profit would now be, instead of 20,000, it would be 40,500, because the gross profit is 45% of 133,000, which is 60,500. The overheads are still 20,000, our gross profit. So our net profit doubles. So basically, the effect of those 10% improvements, and this is typical for most businesses, the three sets of 10% improvements have added 50% to our gross profit and 100% to our bottom line profit. You've doubled your profit. Now, 10%. So if you thought about, say, devoting an hour a week or even more, but certainly an hour a week to working on your business, which a lot of small business owners don't do, could you make, you're talking about less than a 1% improvement a week in each of these numbers, in one of these key numbers. 3 lots of 10% is 30%, 50 weeks a year. You're not going to work all of them, but So less than 1% a week would get you the 3 lots of 10%, which will get you the doubling of the bottom line profit. If you're interested in finding out how to do that, obviously get in touch. My website is bernardkeevy.com. One other interesting piece of information for you is that if you make plans to do this, then you've got something like a 20-30% chance of achieving it. But if you actually work with someone and say, I'm going to do this, and you ask to be held accountable, that figure goes up to 95%. So you double or treble your chances of actually succeeding in doing this if you actually tell someone that you're going to do it and then you ask to be held accountable. And that's the argument for working with someone, a coach, to actually help you achieve these results. Hope you found it interesting. Thanks for watching. If you saw my earlier presentation, you'll know that I went through all of this and then discovered I'd put one of the numbers in the wrong place. So there you go. Thanks very much anyway. Hope you found that interesting and useful. And obviously feel free to comment, criticize, get in touch. Cheers now. Bye.